Hello investors and welcome back to the channel. I am Mitali Dhoke here to simplify mutual fund investing and guide you on a smarter wealth creation journey. Today we are diving into one of the most exciting stories shaping the future of technology and investment, India's semiconductor revolution. The Indian government has signed off on a major leap into semiconductor production, with proposal to introduce its first locally made cutting-edge chips in the next few years. This is a watershed moment as the nation swings from being a consumer of semiconductors to also being an active player in the global supply chain. With policy support under Make in India initiative and the Semicon India Programme, the growing demand from industries such as AI, EVs, 5G and smart devices, India's semiconductor story is quickly taking the shape of a sunrise opportunity for investors. Let us understand India's semiconductor ecosystem. India's semiconductor industry is nascent but is growing fast. First is manufacturing. Leading international and local companies are investing in chip fabrication facilities and assembly houses, which indicates faith in India's long-term opportunity. Next is design and research and development. India's IT talent is being used to create world-class chip designs, lessening reliance on imports and improving the domestic value chain. Policy and incentives. Programs such as India Semiconductor Mission are driving infrastructure creation, talent development and research innovation. In a major milestone for India's semiconductor sector, the Indian Institute of Technology Madras and ISRO have collaboratively designed and indigenously developed semiconductor chip, the RISV controller for space application IRIS. This indicates a robust homegrown R&D competence and emerging prospects in space tech hardware. India's semiconductor industry, worth around $38 billion in 2023, is expected to grow to $40 to $50 billion by the end of 2025 and $100 to $110 billion by 2030, as per a recent government press release quoted by the Economic Times. These developments together indicate an industry set to grow in the long run. Direct investment in Indian semiconductor companies is however restricted, and this is where mutual funds prove to be a great investing vehicle. We have listed the top 3 mutual funds on the basis of 5-year rolling CAGR with high allocation to semiconductor stocks. First is the Motilal Oswal FlexiCap Fund, which is not a thematic fund but a diversified scheme permitting dynamic allocation between market caps and sectors. It was launched in April 2014 with an AUM of close to Rs 136.8 billion as of August 2025. This fund is based on a bottom-up stock picking philosophy anchored in the QGLP quality, growth, longevity and price philosophy. The portfolio is diversified with large cap constituting about 44.3% of the assets, mid cap 49.8% and small caps 1.4%. The mandate is flexible enough to leverage several themes such as infrastructure, manufacturing and consumption based on the way the market is behaving. During the last 5 years, the fund has returned a CAGR of 29% plus, highlighting consistency in performance through market cycles. The total exposure in semiconductor stocks is 17.52%, with the highest allocation in Dixon Technologies 9.76%, CG Power and Industrial Solutions at 6.34% and Kinase Technologies at 1.42%. Its sectoral distribution consists of technology 20.89%, retailing 17.71% and capital goods at 12.51%. The emphasis on quality growth stocks lends stability, and the flexi-cap structure enables the fund to leverage opportunities in the high growth sector. Second is the Canada Tobacco Infrastructure Fund, which is one of the leading thematic schemes with a focus on India's developing infrastructure story. Launched in September 2005, the fund has an AUM of Rs 8.89 billion as of August. The portfolio is tilted towards large cap stocks, almost 54.3%, but has exposure to mid cap 30.1% and small caps 11.34% as well. The fund adopts a growth style that seeks to capture India's infrastructure growth momentum while remaining diversified across sub-segments. In the last 5 years, it has given returns of 31.9% CAGR, which is among the better performing semiconductor heavy allocation based mutual funds. Its holding in semiconductor stocks amounts to 12.3% of its AUM, with the highest allocation in Bharat Electronics at 3.61%, Dixon Technologies 3.56%, CG Power and Industrial Solutions at 2.99% and Kinase Technologies at 2.14%. Its sectoral exposure in the capital goods is 24.23%, power 11.4%, and infrastructure 9.14%. The strategy is aggressive in terms of sector positioning but controlled in stock selection. Third is the HSBC Infrastructure Fund, which has established a niche position by offering a player on India's increasing capital expenditure and urban development plans. The scheme, which was launched in January 2008, manages an AUM of about 227.8 million as of August 2025. Its portfolio is diversified across large caps 55.34%, small caps 30.71%, with some allocation to mid caps at 11.71%. that have the potential to emerge as future leaders. The investment approach focuses on spotting firms with robust order books, execution prowess, and financial health. From the perspective of performance, the fund has recorded a positive 10-year CAGR of 17.1%, whereas its 5-year CAGR is 29.3%, delivering well above its benchmark in infra upcycle periods. The total exposure to semiconductor stocks is 10.6%. Its top holdings are in Bharat Electronics 7.97% and Dixon Technologies 2.62%. The sector tilt is in favor of capital goods 32.7%, infrastructure 12.9% and power 8.94%, with selective bets in utilities. The fairly diversified strategy of the fund ensures that it does not only invest in headline infrastructure projects but also in complementary industries that are likely to gain from India's long-term growth. Now, to conclude, for investors, the semiconductor sector represents more than just a thematic play. It embodies the future of technology-led growth. Unlike cyclical themes that rely on short-term triggers, semiconductors are deeply intertwined with structural shifts across industries, from digital infrastructure to clean energy. India's growing role in this space, backed by government incentives and private capital inflows, suggests that the opportunity could expand steadily over the next decade. Mutual funds provide an efficient way to invest in this industry, enabling investors to invest in firms along the semiconductor value chain without having to select individual stock. The expert management, diversification and long-term mindset of these funds make an interesting proposition for those looking to tap into India's semiconductor growth opportunity with prudent risk-taking. So, if you like this video, please share it with your fellow investors. To find more such expert insights on mutual fund investments, hit the subscribe button below. Signing off for now, happy investing. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Registration granted by SEBI, enlistment as IA with exchange and certification from NISM is no way guarantee performance of the intermediary or provide an assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.